Whole life insurance is the payday lender of the middle class. Love you, Dave. Hello and welcome to the Durham Talents channel. My name is Jesse Durham. For today's installation in our Myths, Mysteries, and Misconceptions playlist, we're going to address another touted, dogmatized, propagandized phrase from Mr. Dave Ramsey, who I love dearly. But we must address this idea of whole life insurance companies being the payday lenders of the middle class. Let's actually break this phrase down. Let me first hone in on middle class. Dave, is this a concession that whole life insurance is such a quality asset that it is pertinent to considering oneself as at least middle class, if not above? I think that's such a huge point. Now, interestingly enough, there in the past have been plenty of folks like our grandparents and great-grandparents who would have owned whole life insurance policies. They might not have had much else, but they would have done that. They would have had that, and some of them would have borrowed against it as well, which is really interesting. And we have these historical references. We have the J.C. Penney's, we have the Walt Disney's, we have the Miss Christophers that started Pampered Chef. We have so many different examples out there. Ray Kroc with McDonald's. So many historical examples of folks when they could not obtain conventional financing for some great ideas, they were able to with their private property. They were able to with whole life policies. They were able to get to the cash value. Now, these were policies that were not even structured the way that we can structure them today with a paid-up additions rider and create an even earlier and a higher cash value earlier on, which is amazing. But again, I'm just trying to point out that that middle class portion of that saying should be a flag to us, should be saying, well, hey, middle class. Okay, so maybe it's a good move if you're looking to improve. So if you wouldn't consider yourself middle class right now, perhaps that's something to aspire to. Perhaps that's and especially and particularly for the purpose of becoming your own banker. Why are folks stuck in middle class, or why are folks less than middle class? Is it perhaps because the average American is bleeding out 34.5% in interest alone, a third of our gross cash flows leaving us in interest, dollars never to return to us? Maybe that's it. Okay, so I'm just trying to point out that even Dave himself says that it's to be associated with middle class to have whole life insurance. And I think there's a lot of value in noticing that part. And let me say this. I have covered this saying as a quote. It was quote series number 40, if you care to look that up. That was back in 2021. That's 3 years ago that I actually covered this saying. So if you want to see an older version of me talking about some of these things, but I'm trying to go into the deeper waters right here. But 2021 quote series number 40, if you want to check that out, I covered this saying. But again, noticing that this saying references middle class, that's a big deal. Now let's talk about the payday portion of this. Again, I believe this ties into what we were just speaking about historically, in that while Dave is trying to say, well, you would only go here out of exigency, out of an absolute need. And again, he endorses you having an emergency fund. Me too. He endorses you not being in debt up to the ears with bad consumer debt, the credit cards. Me too. That's great. Awesome. I love it. But this idea of trying to malign mutual life insurance companies or life insurance companies in general that sell and provide whole life insurance, the attempt to malign them by associating them with a payday lender. Will you tell me, have you ever heard of Disney? Let's go back to those historical references. I mean, I could talk about my own experience of being able to access cash value in exigencies and in opportunities, both of which have happened in my own personal life. But perhaps you've heard of Disney, okay? Just to go ahead and put the big name out there, why not? Who has had whole life insurance and what have they done with it? Well, Walt Disney was able to launch Disneyland, which was a novel idea at the time, to have a family-friendly theme park. That was not the norm at the time. A clean, family-friendly, nice-looking theme park, not the thing. And when he was not able to obtain conventional financing for this idea, he was able to get to capital from whole life insurance policies that he owned. So if you're trying to say on one hand that mutual life insurance companies or life insurance companies are payday lenders, and at the same time we have these historical facts of J.C. Penney being able to weather the Great Depression and cover overhead and salaries and such for his employees to be able to get through the Great Depression. I mean, you would call that being subject to a payday lender? Oh, no. Let's set the record straight when it comes to that. J.C. Penney weathering the Great Depression, Walt Disney launching Disneyland, Miss Christopher wanting to start her own business, going to private property, whole life insurance that she owned, leveraging that cash value to launch Pampered Chef that was eventually bought out by Berkshire Hathaway, Warren Buffett's company. How incredible. Ray Kroc getting McDonald's and making McDonald's what it is today, using whole life insurance to buy out the McDonald's brothers. So incredible to see the historical references, I believe, just to have a benchmark of who has used it before. And then you could look at today. We know that President Biden, for example, owns whole life insurance. Why is that? I'm just asking the question. Why would that be? Why would that be that somebody would want to own guaranteed private contracts that provide death benefit, tax-free, and cash value? Why is that? Okay. Why do banks own more in life insurance than they do in real estate? Why would that be that a bank would own more in life insurance than real estate? Does that sound like the payday lender of the middle class? Now, again, I know that when Dave says payday lender of the middle class, he's talking about things that we've also already covered on this particular playlist, on this series, this Myths, Mysteries, and Misconceptions playlist. So I would encourage you, if you're curious about what he has said and what my response is to, well, you've got to pay interest to borrow your own money. Or, well, yeah, they'll pay you the death benefit, but they'll keep the cash value. The insurance company will. And other things that associate with insurance being the payday lender of the middle class. I would encourage you to check out those other episodes on this channel. But again, to speak to my own experience, having the ability to buy contract, I picked this contract with this company. For example, now I own multiple policies with multiple companies, but what I'm saying is I picked a premium that I wanted to pay. It created a tax-free windfall to my heirs and beneficiaries upon my passing, and it will be upon my passing, not if, it'll be upon my passing, right? Tax-free windfall to the next generations. And today it creates a cash value that I can use, that I can access without asking permission. See, I'm not asking permission, all right, to be able to do this. And what is the collateral in this relationship? That's a big point. The collateral is the future death benefit. This is a self-collateralizing asset. And it is an appreciating asset because the cash values that I may or may not want to access today are greater than they were yesterday. And that'll be the same the next day and the next day and the next day for my whole life. Emphasis on whole life. So remember these key points. Number one, everything is financed. Okay. Why do people go to payday lenders? Exigency. Let's confront that one first. Okay. Some hardship, some exigency, some emergency is why people would go to a payday lender, for example. Another reason why people would need access to capital in a hurry could be an opportunity. So remember, everything is financed, whether it's a hardship that you need to weather, some storm that you need to weather, or whether it's some opportunity that you want to take advantage of. Everything is financed, and either you'll use credit or cash to accommodate those things. You'll be beholden to somebody else using credit, their terms and conditions. You front the collateral. You are assuming risk. You're going to be paying them interest. That's what that looks like. Or you have to give time to save up the capital for what it is that you want, and then you liquidate it down to zero, forfeiting the opportunity to earn forever what you could have earned on that capital for the whole rest of your life. So credit or cash. Well, what if you could keep your money and you could leverage it at the same time? What if you could grow it and compound it for the whole rest of your life, and you could leverage it? Having access to capital, tax-free, when you want, for the things that you want, the hardships or the opportunities. So everything is financed. You must also consider where to store your capital. Where should your wealth reside? Where should you be putting and building and accumulating and amassing your capital? I would suggest that you consider a properly structured whole life policy with a mutual company that pays dividends. It is a private asset that you can own and control for your whole life. And then, of course, my own experience is that, and I've put this out there in my life lessons a whole lot, where I discuss different ways that we've used our system of policies, our private banking system, when it comes to real estate, when it comes to family vacations, when it comes to recurring expenses, when it comes to our legacy purposes and building intergenerational wealth, and all these types of things. I'm asking you to consider questioning, is whole life insurance really the payday lender of the middle class? Knowing what all these historical figures have done with it, knowing what banks are doing in buying it, and coaches and presidents and lots of popular people that we know are doing and buying it. Of course, I'm an open book with my own experience. So my strongest recommendation is that you spend some time and money in your financial education, your financial literacy. Check out the book, Becoming Your Own Banker by R. Nelson Nash. I love Dave, love listening to Dave. He's got a lot of great points, principles. I'm a big fan in so many different areas outside of whole life insurance, because it overlooks the banking function when he's talking about payday lender of the middle class. It overlooks finance. It overlooks the banking function, like much else that he says in connection with whole life insurance. And what I'm asking you to consider, just consider, is vetting this idea of becoming your own banker for yourself. And if you'd like to have a conversation about what it could look like for you to implement the infinite banking concept into your household or your business or your investing, then don't hesitate to reach out to me. You can find me at durhamtalents.com. This has been a great pleasure. I hope you have a great day. Take care.